If you want to win with buying or selling a house in West Hills or around the Los Angeles area, you need to adapt to the current real estate market, a market that is constantly changing. Some people are stuck in last year or even a few years ago, thinking that what helped their friend, neighbor, or family member buy or sell a house then will still work now. I'm sorry to be the one to tell you, but it usually doesn't work that way. Even 6 months from now, the data I give you today will be outdated. Relying on old data or tactics won't give you the same results because the market's different now. What does work though is having current information to base your decisions on when you are ready to make a move. That's why I share market updates with you every single month. I'm Chastity Lousteau, real estate broker in West Hills, California. In this month's West Hills Real Estate Update, I give you the information you need to know in 3 key parts so that you can sell or buy your house confidently without wasting money, time, or resources because you relied on old information. First, we'll cover housing supply and demand. Next, home price and appreciation rates. And third, mortgage rates. Although the numbers are specific to this city in Los Angeles, the trends are not. This is what's happening in many of the surrounding cities. So you don't have to be in West Hills to gain insights from this market update. First up is housing supply and demand. You may have heard the term seller's market or buyer's market. In other words, who does the market favor based on supply and demand? There are several key metrics that help us understand this concept better. The first of which is months of inventory, which currently stands at 1.4. So here in West Hills at 1.4, that's advantageous for home sellers. The good news is 16% more houses were listed for sale last month, so that's some improvement for the buyers. The challenge is the supply of houses for sale is down almost 50% from what we would consider normal. New listings for sale were up from January and up 52% from the same time last year, so that's good news. However, it's still down 33% from 5 years ago. On to active listings, pending sales, and closed sales. Now, these three are telling us a similar story. Up from last month, but down from last year, down from 5 years ago. Further proof that our inventory is undersupplied for buyers. Here are 3 more indicators of buyer demand: median days on market, median shows to contract, and median percentage of original list price. What these 3 trends are telling us is buyers are acting fast on homes they like, homes are selling quickly if they're prepared well and priced to sell, and buyers are offering sellers their asking price. When you look at this data and understand that the demand from buyers is higher than the supply, the amount of homes they have available to buy, you can see how this scarcity in inventory creates competition among the buyers, which pushes the home prices up. And this is why our home prices have not dropped. Let's take a look at home prices now. By the way, all these slides and more are available for download in the description below. After you watch the video, go grab the slides and call me if you have any questions about what this means for you and your home buying or selling plans this year. I respond to all my comments and I'd love to chat with you about it. On to home price and appreciation rates. All are up from last month and last year at the same time. Here you will see the average home price appreciation rate for homes in West Hills for the month of February was 11.93%. This is the first double-digit increase since October. Last year at this time, the home appreciation rate was negative 10.43%. The year prior was positive 19. So basically, this year we gained back what we lost last year. And here you'll see the average sales price for West Hills single-family homes was $1,107,560. That's an over 11% increase from last February. Quickly, this chart shows you the average sales prices in West Hills for the last 10 years. If you want to study this in more detail, it's in the slides you can download. Taking a closer look at this historical chart that dates back to 2008, you can see a dip in home prices during the Great Recession and housing crisis. Then in 2012, the recovery starts. Since then, it has been upward movement in home prices and appreciation for homeowners. These prices are reflective of how real estate can help you build wealth over time. 5 years ago, home prices were more expensive than they were the prior 5 years. 5 years from now, I expect home prices to be more expensive than they are today. Other than the rare exception, home prices in the United States go up. That's good for existing homeowners whose equity is growing and they continue to build wealth. But for those who have not yet bought a home, or even those who own a home but want something different, higher home prices plus higher mortgage rates is causing affordability challenges, which takes us to mortgage rates. There seems to be so much fear and uncertainty around mortgage rates, like it's the end-all be-all. You have to keep that mortgage rate for as long as you own your home. Well, I can tell you, being a mortgage loan originator for the last 18 years, that's not the case. This is the Freddie Mac US weekly average 30-year fixed mortgage rate for a week ending February 29th at 6.94%. The 15-year fixed, 6.26%. It's true, today's 30-year fixed mortgage rate is over 2.5% higher than the 10-year average at 4.28%, as you can see in this chart from Freddie Mac. It's also true that the recent mortgage rates in the high sixes are lower than the long-term average rate of 7.74% that dates all the way back to 1971. So what this chart does is helps us put things in perspective. Rates are actually projected to come down mid-year as the Fed continues to tame inflation. So that's something we can look forward to. Yes, rates can impact what you qualify for if you need a loan to buy a home, but you are not necessarily married to that rate forever. There may be opportunities in the future for you to refinance if rates come down. And you can speak to a loan professional about different loan programs that possibly offer a lower initial interest rate from the beginning. The take home is having current information about what's really happening in the real estate market gives you the freedom to decide when and what's best for you. So for all you homeowners who want to sell your house in the next 3 months, what does all of this really mean for you? And what can you do to adapt to this market that is ever changing? Know that the longer you wait this spring to sell your house, the more competition you will have. With more competition, you will need to make sure your home stands out. You do that by preparing your home to sell, pricing it well, and promoting your home using modern marketing strategies. There are professionals that will help you do all of that. And that's exactly what we do. We have the know-how to help you plan, prepare, price, and promote your home so you can sell with confidence. What about those of you who want to buy a home in the next few months? And you could be the same as the home seller. What does all this mean for you and how can you adapt? Similarly, the longer you wait to jump in and buy a house, the more competition you will have also. Spring is the prime buying time. You need to be prepared with your finances, whether you're paying cash or getting a loan. Don't wait until you've found a home that you love and you want to make an offer on to start the pre-approval. Next week, I will be releasing the spring market update for all of Los Angeles County with even more information. So stay tuned, particularly if you are outside of West Hills. Again, I'm Chasity Lousteau, your real estate broker and mortgage loan originator in West Hills, California. I give you the keys to sell, buy, and finance your home with confidence.